Good afternoon, good evening, good morning, depending on where you are in the world attending this webinar today. Today, I'm going to talk about audit and ethics update. Before I do so, a quick introduction to myself for those of you that haven't been to one of my webinars on behalf of 2020 before. My name is Alan Morgan. I trained here in the UK as a chartered accountant, and now I'm a member of the ACCA. I've been training accountancy practitioners, small and medium-sized practices for over 25 years now. And just 6 years ago, myself and my business partner set up a new international network called Kudos International Network, and we have grown that successfully over the last 6 years. So enough about me. Before we move on to talk about the content of the presentation, I just quickly want to run through one particular housekeeping issue with you. If you do want to ask any questions during the course of the webinar, you can do so in the questions box towards the bottom right of the GoToMeeting toolbar, which should be, usually is anyway, on the right hand side of your screen. I will try, because I'll be aware that as with myself, English is not everyone's first language, so I will try and go through things as slowly as possible. I see one question already. Are there any handout notes? Yes, there should be some handout notes, details of which should have been emailed to you, I believe, late yesterday afternoon UK time. As to, I think, on the original email that contained the login details, there was also a link to actually download a PDF of the Word document, the detailed notes, plus also details of the presentation as well. Okay, without further ado, what are we going to be talking about in the next hour or so, as I have with you have you for the next 60 minutes? We're going to start by looking at the revised ISA 540, which is on accounting estimates, which has recently been published by the International Audit and Assurance Standards Board for implementation from accounting periods beginning on or after the 15th of December 2019. I'll be re-emphasizing that particular start date again when we look at that standard, largely because sadly, on reviewing the notes just now and in preparation this morning for this webinar, I realized that I didn't put the actual date in. You will have another opportunity later to make a note of that date. Obviously, depending on where you are in the world, different countries will adopt the international standards on auditing at different times. So there may be a time lag of 6 to 12 months in some geographical locations as to when that change will actually take place. I'll go through my thoughts on ISA 540 in more detail later on. The International Audit and Assurance Standards Board have also been working on some additional projects on skepticism and data analytics. I will be bringing you up to date on those particular projects in the area of skepticism and data analytics. The skepticism one in particular is interesting because there are no particular outputs that I would now expect from the skepticism project, aside from when new standards come on stream. There will be some additional documentation and particularly application material on introducing skepticism into particular ISAs, and the same goes for data analytics, though I will be dwelling on that in more detail later on. Another project the IAASB has been working on is ISA 315, revised, and there's an exposure draft which was published a few months ago. Comments had to be in by the 2nd of November, earlier this month. I will go through some interesting parts on ISA 315, because particularly in the area of internal controls, I think there has been some clarification in the guidance notes on exactly what needs to be done in terms of internal controls documentation, testing the implementation of the controls, and also testing the operational effectiveness of controls. And I will try to highlight that when we look at ISO 315, because I think the lessons learnt from the preamble to the exposure draft on ISO 315 effectively gives additional guidance as to what the ISA is trying, but arguably failing, to actually say now. Data analytics, I'll be talking about that later on. I will also be talking about the new ISQC M1 standard, which is likely to be issued as an exposure draft in Q3 2018. Just a quick calculation by most of you will realize that we are coming to the end. Sorry, did I say Q3? I meant to say Q4 2018. We're coming to the end of that, so I would anticipate an exposure draft on ISQ M1 and ISQ M2 very shortly. The future of standard setting and coverage of the new ethical code, I will leave if there is insufficient time. They are topics that we have covered on previous sessions and are relatively insignificant in any case in terms of your work, particularly the future of standard setting. Even the new ethical code doesn't have too many in reality changes, but I'll talk about that later on. Okay, ISA 540 on accounting estimates. This was largely needed as a result of the implementation of IFRS 9, and in particular the expected credit loss model on banks and financial institutions. It was anticipated that as a result of IFRS 9, there would be additional complications that would arise in terms of the estimates required for the expected credit loss model, that has required some rewording and recalibrating of ISA 540 on accounting estimates. It is interesting to note, though, that the reference to fair value estimates has actually been taken out of the title and much of the preamble to ISA 540, not because fair value estimates are irrelevant, but it was just thought of as being a duplication, and all fair value estimates are just accounting estimates in any case. One of the changes that is noticeable in the revised ISA 540, and I will be talking about this more when we look at skepticism in a few moments' time, is that there is an increased emphasis on the idea of skepticism and introducing skepticism as a key auditing principle within ISA 540 revised. And the importance that when you are looking at accounting estimates that are invariably or should be produced by the management of the entity, it is imperative that as auditors you remain skeptical as to what those estimates actually show. One of the things that ISA 540 also concentrates on is the fact that there is now a specific requirement that where there is an estimate that leads to a significant risk, you recognize that as being a significant risk as a result of an accounting estimate. In reality, that's not a massive substantial change, because if there was a significant risk which was recognized as being as a result of an accounting estimate, it would have been covered as being a significant risk in any case. It's just a slight reclassification of risks, I suppose, if we were to be inquisitive about it. But if we go back to skepticism for one moment, one of the ideas that the standard actually comes up with is that one way you can test for the one of the ways you can test for the reliability and accuracy of the client's accounting estimates is to look at previous accounting estimates and the outcomes of those that management have actually made. Now, obviously, what would be very good evidence of outcomes of previous accounting estimates is if they are in the same area. So that, for example, if you are looking at an estimate for impairment of receivables, bad debt provisions, that a client had previously estimated, one way of auditing the same accounting estimate in subsequent periods is to look at what happened in previous years with regard to explanations obtained from the client in respect of impairment of receivables. So, for example, if a client assured you that something was actually going to be paid very shortly after the signature of the audit report, and you relied upon that as being a key plank of your audit evidence when responding to the risks of accounting estimates within ISA 540, then when thinking about this year's estimates, one way of auditing that is to look back at what happened in previous years. Was the payment received, or actually are you now discussing the same receivable as to whether or not it should be impaired? And if the latter is the answer, then perhaps you need to be much more skeptical about the representations made to you by the client's management, not just in the area of receivables, perhaps, but perhaps in other areas as well. One of the services we provide to firms, not just in the actual Kudos network, but as part of our other trading company, is to do quality control checks on audit files. And there's a particular case in mind whereby representations are made by directors on a regular basis with regard to going concern on a company which has long made losses. And although the company continues to survive, I won't say thrive, it's amazing how many times representations made by the directors in respect of going concern actually don't come into fruition. And one of the issues I've actually raised with that particular client and one of the with that particular audit firm, and that has now come to pass, that perhaps they need to be much more skeptical about other representations that the client has made to them. And it has now subsequently turned out, as part of a legal case, that a number of other false representations were made by that client to the auditor, which obviously then has an ethical knock-on effect as to whether or not the audit firm should continue to act. So looking at the past results of past management representations, I think is a key part of being skeptical. And if it transpires that past management representations can't be relied upon, then not only should you be much more skeptical about current representations in the same area, or even perhaps different areas, then maybe you need to also think about whether or not you should continue to act for that particular audit client as well. Another small change within ISA 540 is when you have a reasonable range which you have calculated as part of your audit work. You now need only to look at the lower end of the range and the higher end of the range at both extremes of the reasonable range and assess whether or not they are reasonable as part of your audit work. You don't have to worry about measures in between. There is also some additional commentary in ISA 540 on the use of experts, as if there is more of an encouragement as to the framework that should be used when employing experts, either by management, which is covered by ISA 500, or in rare circumstances, use of an audited expert, which should be covered by ISA 620. When ISA 540 was in draft, and also when the project was ongoing, there was much discussion about whether or not the standard was likely to be scalable, whether or not it could apply to sophisticated banks applying the expected credit loss model under IFRS 9, and also to owner-managed businesses where perhaps estimates are used to estimate inventory provisions, impairment of receivables, etc. The IAASB have now said within ISA 540 revised that they are very happy that the standard is scalable. And I think as long as a firm and as long as a provider of audit documentation, such as ourselves, are able to understand the principles behind ISA 540, then the standard does become scalable. Firms that just concentrate on the shoulds within an ISA will probably not think laterally enough to actually make the standard scalable. I firmly believe that all of the standards which the IAASB are currently producing are largely very scalable for owner-managed businesses as well. In terms of the date, I just want to clarify that ISA 540 revised will be implemented for accounting periods beginning on or after the 15th of December 2019. If we look at full years, that means it won't be implemented until accounting periods ending on or after 31st of December 2020. So the first time that audits will have to be conducted using ISA 540 revised will be early 2021. So maybe in 2 years' time, you'll still be starting to plan for ISA 540, or having to plan for the revised ISA 540. We've been through it. We don't think it significantly changes what we need to put into our audit documentation. And I suspect most people will arrive at that same conclusion unless they have an audit program which is specific to banks, in which case many of those changes would have to be introduced as a result of IFRS 9 in any case. Just one other point in terms of the date. I knew I had something else to mention. With regard to the date, then early implementation of ISA 540 is allowed, and indeed, I guess, would be encouraged for the audit of clients that are implementing IFRS 9 early. Okay, let's move on to look at skepticism. And in the notes, I've used both the US spelling of skepticism with a K and the UK spelling with a C. I've just used the C here because that's just my force of habit. What the IAASB have produced in terms of skepticism, specific from the skepticism project, is something called Professional Skepticism Focus Newsletter. When you look at that newsletter, it frankly just signposts other material that the IAASB have produced within other documents, such as ISA 540 revised, such as the exposure draft of ISA 315, which illustrates additional areas where firms need to be skeptical in. And it's really, the Professional Skepticism Focus newsletter, which will, I understand now, be a regular newsletter from the IAASB Skepticism Project, is really just to be seen as a signpost as to where additional emphasis is placed on professional skepticism in standards, and I suspect as well professional skepticism will be expanded upon more readily in the new ISQC standards, which I'll talk about later on. So one of the things we are seeing in ISA 315 exposure draft and in ISA 540 revised is much more emphasis on professional skepticism. And one of the things that I think will happen in the next 5 to 6 years, this is just my viewpoint. I've heard nothing from this from the IAASB in presentations which we attend every 6 months. But I think at some point in the future, depending upon the outcome of the monitoring group's report on the future of standard setting, but if the IAASB continues in its current form or largely continues in its current form, I think we may see a significant rewrite, a full rewrite of the auditing standards to encompass both the additional principles of skepticism and also to encompass data analytics. I think as and when we see 540 and 315 being revised, we will see skepticism and data analytics coming front and center in those standards, and that's particularly prevalent in terms of data analytics in ISO 315. But I think as a result of this, we will potentially see a significant rewrite of the standards for skepticism and data analytics, and I think rightly so. Whilst I wouldn't want to see a significant rewrite of the standards again, it is something which I suspect will happen. It probably won't be as earth-shattering as the clarification which came in 2010, but I suspect all the standards will be rewritten in time. Just a couple of things which have been highlighted to me in terms of skepticism and ways of making sure not only skepticism is applied by staff during the course of the audits, but also that skepticism is actually evident through the course of the files. So when a regulator or a peer reviewer comes in to examine your audit files, you can demonstrate that there is adequate skepticism shown on individual audit assignments. One of the ways that I've always felt that you can train staff to be skeptical when undertaking audit work is to actually provide them with regular examples of frauds that you have come across in the past. I don't know if any of you have seen the additional advanced audit online training tool, which we produce, but within there, we actually go through a series of examples of fraud, which we think help to make staff more aware that fraud does actually happen in companies, and particularly sometimes the not-for-profit sector. But fraud is prevalent in companies, does happen. Most companies will have had some sort of fraud conducted them in the past, perhaps immaterial, perhaps material. And we firmly believe that one way of encouraging staff to be skeptical is to regularly highlight these examples of fraud to them. And I don't know how many of you are from networks that have bought the ICAW's training videos, False Assurance and Without Question, but certainly we've bought False Assurance for our network, and I was with a firm, I think week before last, just outside London, and I showed them the False Assurance video, and all of them afterwards, you could see the level of skepticism amongst the staff rise, and hopefully with regular encouragement from partners and quality managers, they will actually apply skepticism much more closely. And when managers and partners are reviewing audit files on an engagement level basis, and this will be one of the changes coming through in ISO 220 in due course, is that partners in particular and managers need to take a greater role when reviewing audit files to actually critically evaluate whether or not their audit team has been sufficiently skeptical enough at the planning stage in terms of assessing risk, particularly fraud risk. One of the common problems I certainly find when conducting peer reviews for firms is that the level of fraud risk assessment is often too low. And people often complete a fraud checklist or complete a fraud risk assessment and say, there's no risk of fraud. That's an incredibly dangerous thing to say at the beginning of an audit, to say there's no risk of fraud. I know it's probably meant there's no risk of material fraud, but there is always some risk, which you need to then introduce tests to make sure you deal with those fraud risks. Very often, no additional testing is actually required, just an understanding amongst the staff as to what the fraud risks actually are, and therefore what to look out for when conducting that particular training, when conducting that particular audit work, sorry. So the role of the reporting partner and indeed managers on assignments should be to monitor at the reviewing stage, the planning and reviewing the audit work stage and the supervision stage to make sure that sufficient skepticism is being applied. And also what I'm starting to see now with some firms, and I think this is something which more and more firms will introduce into their audit systems, and also by individual firms on their audit files, is some within a audit completion memorandum or an audit highlights memorandum, or perhaps a separate schedule as part of the completion side of the audit, a schedule which actually documents down how the audit team have behaved in a skeptical fashion, so that when a regulator or a peer reviewer actually comes in, the firm has been able to demonstrate that they have applied adequate skepticism. Because sometimes when reviewing an audit file, because skepticism is a state of mind, sometimes it isn't easy to actually document levels of skepticism, which I accept completely. Okay, so ISA 315, before I look at that, I think the question, I've just had a question through on evidencing skepticism, and yes, I would completely agree with that, and I hope that in my last point with respect to evidencing skepticism and the idea of evidencing the skepticism as part of a completion memorandum, perhaps, I may well have dealt with that particular point. So moving on to ISA 315 now, if I may. I'm sorry, by the way, if sometimes I don't see all the questions. It is actually quite a small section on my toolbar. I think I've dismissed all the questions now successfully. Okay, let's get back to ISA 315 then. An ISA 315 exposure draft is really an example of what I was just talking about a standard which introduces professional skepticism and data analytics in more depth. I think also ISA 315 does improve the usability of the standard to owner-managed businesses as well. It was one of the key things that the IAASB wanted to achieve with the rewrite of ISA 315, was to make it clear that it can be adapted to owner-managed businesses and less complex businesses. Sadly, one of the things that the IAASB didn't do, from my personal perspective, is to say that, okay, on an owner-managed business, perhaps you don't need to understand the systems of internal control, and you don't need to test the implementation of the system of internal control. The IAASB conclusion on that is where there are relevant controls to the audit, which is now more closely defined within the ISA. Not only is more closely defined, but there's a listing within the exposure draft of what are always to be regarded as relevant controls to the audit. But those relevant controls to the audit still need to be documented, and also still need to be tested for implementation, which is via walkthrough tests, which I will go through in a few moments' time. The new standard I would expect to be published in the second half of 2019, and I think is likely to be applicable for accounting periods beginning on or after the 15th of December 2020, which means it won't actually be in use until audits that you start to plan in late 2021, perhaps for interim audits in late 2021, and then for December 2021 year ends onwards. I think one of the main benefits that I want to concentrate on in terms of ISA 315 exposure draft is actually some clarification I think it gives to what the IAASB currently mean in the extent the currently applicable ISA 315 in terms of internal controls. As I've already said, the IAASB have made it very clear in the introduction notes to the exposure draft of ISA 315 that they have deliberately maintained the requirement to document the system of internal controls across all audits, because as far as they are concerned, that is something which the auditor requires in order to understand the client sufficiently in order to undertake the audit. And once you remember that, you actually realize that the reason that the IAASB want a firm to document the system of internal controls is not to necessarily test those internal controls, but just to understand them, so that you improve your understanding of the audit client. It then talks about what are relevant controls, which would be controls over the sales system, purchase system, inventory system, wages system, etc. And then critically, not within the standard itself, but in the preamble, I think is the most interesting part of ISO 315 exposure draft, is that it clarifies for me something which many people have got confused over the years. When you're looking at the test of when you're looking at the relevant internal controls of an audit client, what do you need to do? Well, what the preamble to the exposure draft clearly states is that unless you're going to be relying on those internal controls to deal with areas of significant risk, perhaps, or to reduce the amount of detailed testing which you substantive testing that you undertake, unless you're doing that, there is no need to do the test of operational effectiveness of the controls, the detailed tests of internal controls. What you need to do is to document your understanding of the design of the internal controls, and then the implementation of those internal controls via walkthrough tests. And those walkthrough tests, of course, can be done on a cyclical basis. Walkthrough tests, importantly, remember, only require a sample of one. That's all. To say that the system is working as it's been described to you. And once you've gone past year one of undertaking a particular audit where you need to do the walkthrough tests on all information cycles, you can then do the information cycles on a cyclical basis. So in year one, perhaps you would do tests, the walkthrough tests on sales, purchases, wage salaries, and inventory. In subsequent years, you can take turns over a cycle of 4 years. You might do inventory, followed by sales, followed by purchases, followed by wages, start back at inventory again. I was with quite a substantial firm in London that are not part of the network, but doing some consultancy work for them 2 weeks ago, and I wrote the report just at the end of last week. And their previous peer reviewer, in common with many other people, and indeed this was our initial understanding of ISO 315 as well, thought that as part of ISO 315, you needed to test the operational effectiveness of internal controls, even if you're not actually going to rely on them. And the preamble to ISO 315 exposure draft now makes it clear those tests of operational effectiveness of controls, where you have to do a larger sample of what otherwise might be a walkthrough test, only needs to be done where you're relying on those controls. Otherwise, implementation testing is walkthrough testing and a sample of one, which can be done on a cyclical basis. So only do the test of operational effectiveness. We're going to rely on those controls to reduce detailed substantive testing, or possibly in some cases where you're just doing a combination of test of operational effectiveness of controls plus detailed analytical review, substantive analytical review. Maybe because you can rely on the controls, and also the section is relatively low risk. Certainly with private companies, because of what we are told in the international standards on auditing about the fact that management override risk is always going to be significant, known to managed business, tests of operational effectiveness of controls are largely irrelevant anyway, or rather are irrelevant, because the controls can be overridden by management. So only use them on larger audits where there is a removal of day-to-day management and ownership, and those with responsibility for governance. Within ISO 315, there are some additional areas covered as well, which we haven't got time to go through today. As it is an exposure draft, it is something that probably isn't worth commenting upon until the standard is finalized. We are still going to have effectively a 2-year lead-in time from late 2019 to implementation in 2021. And I suspect we'll have 1 or 2 additional webinars on ISO 315 revised when the time comes. But there's much more in the exposure draft on skepticism, the importance of maintaining skepticism when assessing risk. There's much more documentation of IT controls required. There's much more emphasis on IT controls as we rely on IT-based controls, and companies rely on IT systems in a much more detailed fashion. Data analytics is also covered within ISO 315, albeit there's an alternative phrase used, which I suspect is a phrase that we will come to know more about as the years go on in auditing. So that they've sort of changed the name from data analytics to automated tools and techniques. And that's something we look at, I think, in the next section on data analytics. There's also more emphasis in ISO 315 on assessing risks arising from the financial reporting framework. And also as a result of the fact, and it is a fact, that there is a great variation between firms as to what they actually define as being a significant risk. There is now a specific definition of significant risk within ISO 315 revised. I think one of the things that the IAASB are concerned about in terms of the implementation of ISO 315 in the past and ISO 330 is the wide range of volumes of significant risks they've actually seen. And interestingly enough, I think it's with ISO 330 actually, they talk about the fact they would expect on an average audit there to be between 20 and 30 significant risks. That's quite a significant number. And albeit we don't tend to look at the audit of large public interest entities, but I don't think I've ever seen a file since the International Standards on Auditing were first implemented on a global basis 10 to 15 years ago. I've never seen an audit file with that many significant risks. And usually when I have seen them, I've said, actually, that probably isn't a significant risk. Maybe on a smaller audit, 6 to 8 as an expectation would be reasonable. I think what isn't reasonable is to have no significant risks. That is highly unlikely, particularly when you remember, of course, that income risk is almost always going to be significant. The ISOs make that very clear. Okay, so let's move on to data analytics, or as we now should call it, automated tools and techniques. This is an area, given the fact we've only got 20 minutes or so left, that I'm not going to cover in as much depth as I did on the previous audit update course 6 months ago. I've kept it in there because the idea of this is that we look at things in the last 12 months. So apologies if you weren't around for that particular session, but the recording should still be available to you of the previous audit update, which I did, which goes through data analytics in more depth. But just very quickly, the profession is becoming increasingly aware of the availability of software to use for data interrogation and to assist in conducting our audit work. This can be done by buying specific software, such as the software which is available from Caseware, whose name now completely escapes me. I think it's called Kane. Plus also, you can use your own Excel spreadsheets. And one of the firms that within the Kudos network, who are out in India, that use automated tools and techniques on many of their audits, they simply use Excel and pivot tables. They interrogate the client's data and use pivot tables to write their reports in Excel. The problems with automated tools and techniques, data analytics, is that it needs investment. It needs investment sometimes in software. It certainly needs investment in retraining the staff, your staff, to actually understand Excel spreadsheets better, possibly in the use of pivot tables, skills which not all auditors will actually have. One of the things we are starting to see in larger firms of auditors now is there are people being employed not for their auditing and accounting skills, but for their IT and Excel skills. So firms are starting to employ IT experts as opposed to audit experts to help them in the area of automated tools and techniques. There's very little practical guidance on data analytics. All we tend to see in articles is it's coming. And one of the things I've tried to do in this short session is to give some more practical guidance. We have got a more detailed version of this particular part of the course available. One of the problems, another problem with data analytics is what sort of audit evidence is it? Sometimes it's very difficult with the audit evidence, and we'll see examples of this later on. It's very difficult to assess whether or not it's analytical review, whether or not it's a substantive test, or whether or not it's part of the risk assessment process. And sometimes there'll be some data analytics that I've seen firms do, and I actually find it difficult to think, well, actually, is this risk assessment or is it actually an audit test? And sometimes it's both, frankly. It's your judgment, depends on circumstances. So some key things in terms of the methodology: to import the client data into Excel or relevant software. Sometimes it may data analytics may be you actually making certain interrogation of the client's accounting software as well. You then may use tools to analyze the data. The purpose and nature of the analysis will dictate what category the testing falls into. You know, is it analytical review, substantive test, or risk assessment? As I've said already, and I won't dwell on the point, it's not always that obvious. Questions come through: if the auditor uses automated tools and techniques, what is the auditor's responsibility in relation to the accuracy and completeness of the source data? Very good question. Thank you. Thank you, Clara. You do have to have a greater degree of certainty, I guess, as to the accuracy of the data. But in some respect, I would argue that the accuracy of the data you actually cover through other techniques, such as the detailed substantive testing, and indeed the level of walkthrough tests that you actually undertake on different parts of the system. That will actually give you a certain degree of comfort that the data being produced by the system is accurate. Nevertheless, before you do undertake data analytics review work, automated tools and techniques, then perhaps you actually do need to pay a particular attention to the accuracy of the data in that particular area. And perhaps that's something I'll move on to talk about when we look at examples later on. So I hope that answers the question. I'll come on to Jim your question in a moment in terms of the completeness of the data. Sorry, I'm just trying to make sure that I can see questions as they come in. Apologies for that. Okay, so some of these examples, and I know some of you will have sat in on my previous session on this, but car reseller, once data has been extracted, you can conduct an interrogation for a sample of income completeness and stock costing. So for example, on income completeness, you can see that for each item car that has been purchased, there should be a sale or the item will still be in inventory. An exception report, whereby you might interrogate the client system for journals or other adjustments that have been made at unexpected times. I guess thinking about the question posed in terms of completeness of the data, you can probably draw some comfort from income completeness testing, perhaps or perhaps introduce some specific testing to make sure that you are happy that all the relevant data has been captured by the system. And another way, of course, of in the area of inventory to actually make sure that all the relevant data has been captured, perhaps, is to actually do an undertaking to cast the actual inventory list to make sure, because that's the way of making sure that the total adds up, then all the items in inventory have been included within there. So yes, it's important to make sure that the data is complete, but there'll be some specific tests that you will be able to do in most cases to arrive at such a conclusion. I've spoken to you before about, some of you before, about benefit analysis to detect fraudulent or suspicious transactions. If you have more than 200 numbers which are relatively random, such as expenditure listing, expenditure transactions, the benefit analysis suggests that there'll be a certain percentage of those which will start with the number 1, certain percentage will start with the number 2, etc. If that benefit analysis is deviated from, then that means that there is a greater risk of there being fraudulent or suspicious transactions, and maybe you can target your sample at those particular transactions. But then, is that a substantive test or is it risk assessment? It's very difficult, and I would argue it's a bit of both. You can use client data to calculate debtors days per customer as a form of detailed analytical review, I think. So there are a number of benefits to using automated tools and techniques. It can remove the need for sampling. Once the reports have been set up, they can be used for future assignments. It can save time, and it can help risk assessment and reduce detailed testing. But I think in particular, that issue there, that once the reports have been set up, they can be used for future assignments, is often a powerful argument that I've used to firms for investing in the time to actually set up automated tools and techniques. Very often, once firms are very reluctant to actually enter into the investment for data analytics at first, but once they actually understand that once the reports are written, they can be used on the same assignments and maybe different assignments in the future that use similar accounting systems, then that can be a powerful argument that can overcome the objections to investments. Okay, I'm running slightly close to the hour mark now, so I'm just quickly going to run through the issues and pitfalls, many of which I've actually gone through already, but two things I just want to highlight. One, the investment in data analytics might not pay off in year 1, but there should be a payoff in subsequent years. It's a little bit like investing in cloud-based audit systems. And secondly, where time can be wasted in automated tools and techniques is doing audit work because you can. Always, before you undertake the audit work, think about, does it benefit the assignment and will it save time? If it doesn't help you achieve the objective, then please don't show off and do automated tools and techniques just because you can and because you receive detailed training in it. I'm sure I'm practicing, I'm sure I am preaching to the converted. Okay, let's move on to look at ISQ M1 and ISQ M2 on total quality management within accounting firms, because the scope of ISQC M1 is likely to be beyond just pure audit firms. It's likely to affect all assurance and auditing firms and accounting firms, but also ISQ M2 on EQCR. ISQ M1, International Standard on Quality Management 1, is likely to be built when it is exposed as an exposure draft. And I think the wording of the exposure draft has been agreed upon largely, but just hasn't been published yet, is based on total quality management. If you go into meeting minutes of the IAASB, you will probably find some documents in there which will very closely resemble ISQ M1 exposure drafts. Within there, you will see that the standard now will very much change and build on the importance of total quality management. And if you like, rather than having the 6 pillars of ISQC1 as we have at the moment, we will have 3 pillars. The governance pillar, governance and management, which will cover the importance of tone at the top and the very top of the audit stroke accounting practice being the one which has the responsibility for total quality management within the firm and the need to actually implement quality management procedures within the whole practice. The information, communication and documentation of quality procedures, which will cover not only the whole firm quality procedures, but also the actual auditing procedures and procedures to be used on all assurance engagements. And then the actual quality management procedures themselves, which will include the monitoring procedures, how annual reviews should actually be made of the implementation of the quality manual, and how there needs to be an annual review of cold file reviews as we have at the moment on a peer review basis. The underlying principle behind ISQM1 is that a firm will have sensible pan-firm procedures that will be tailored to their particular needs. And I don't see any reason why a firm will not be able to implement ISQM1 on a proportionate basis. In that, if you were a firm without any audit work at all and just some limited assurance work, then you will be able to assess the risks and introduce a limited set of quality procedures for your particular practice, which would be vastly different to a multinational firm of auditors that undertakes a number of transnational audits of very serious public interest entities, where the documentation of those procedures need to be detailed and the sharing of those procedures amongst the audit personnel throughout the world on a global basis needs to be documented in a very detailed way. Because at the end of the day, ISQM1 in draft form does require a firm to effectively do what ISQC1 does at the moment. Think about your risks of non-compliance with the rest of the standards that you need to comply with, and introduce sensible procedures that deal with those risks. So it is very much risk-led. One of the dangers of the monitoring group review is that ISQM1 in the future may be too prescriptive. And I'll talk about that in a few moments' time. ISQM2 on EQCRs will tighten up the rules and regulations on engagement quality control reviews, so that it will cover not just listed entities, but also other significant entities that could impact on the public perception of that particular audit firm. So where an audit firm has got a very key local employer, perhaps, that may well be covered in the future, and as being an assignment that requires an EQCR through ISQM2. So there'll be a lot more prescription as to what an EQCR will actually involve as well within the revised standard, in terms of the additional emphasis on who can undertake the review, what skills they need to have, as well as reconfirming that when undertaking EQCR, it isn't just a hot file review at the end of an audit file. It's much, much more than that. The engagement quality control reviewer needs to be involved at the planning stage, including risk assessment, how those risks are to be managed at part of the planning under ISA 330, and also then being closely on hand to actually deal with any areas of contentiousness during the course of the audit, and then to conduct the final review at the end. There's a lot more in the actual notes on ISQM1 rather than the slide material. Some of you will be aware, just the last few minutes, that the monitoring group, which looks after the various standard setting bodies of IFAC, are currently reviewing the standard setting boards My concern with this with this particular review is that they're biased towards public interest entities. There's talk about a merger between the IAASB and the Ethics Standards Board. The responses have now been collated, and there'll be some further thoughts from the monitoring group in due course. Okay. A question has come in. What will a network need to know about the ISQM model at each member firm level? Personally, and the way that we are going to be dealing with that within our network is that we will prescribe each firm that they will adopt our internally generated ISQM manuals, and will have to adopt certain quality control procedures as part of their quality management systems, and part of our regular triennial review of those firms will be to review the implementation of ISQM1 as we do with ISQC1 at the moment. So I don't think, certainly in our case, and I can't speak for other networks, I don't think that it's going to require much more than additional training and knowledge amongst our network members as to what is in ISQM1 and why our manuals are actually why our manuals need to change. I know other networks don't always give their member firms ISQC1 manuals at the moment, and I guess they will need to be much more prescriptive, I think, as to the procedures that firms need to have in place to adhere to ISQM1. I know that because a number of other networks actually buy their ISQC1 manuals from our trading company. Quick update. I've gone a little bit on partner rotation. You can see from the slide there, and I won't go through it as we've only got a couple of minutes left, as to the current Ethics Standards Board thoughts on how partner rotation should work on public interest entity audits. In many countries, that is being usurped by audit firm rotation on public interest entities, which is being introduced in different jurisdictions that have their own rules, not just in terms of audit firm rotation, but also in terms of audit partner rotations. Firms need to be fully aware of the rules in their own country, and then networks need to be aware as to the different level of rules, because that's likely to lead to increased costs as we have cross-network component auditor issues. And that is certainly something which we talk about at the Forum of Firms on a regular basis, is problems with different audit firm and audit principal rotation rules in different geographical locations. Okay, I won't go through the new ethical code, as that's something which we did previously on the ethics standards update earlier this year, and it's available to you all as part as a previously recorded webinar. As we're just coming up to the hour mark, I probably just want to talk about the fact that the new ethical code talks about safeguards need to be addressed in one of three ways: eliminate the circumstances, apply safeguards, or to decline or end the specific professional service. Also within the new code of ethics, it talks about in more detail the dangers of internal inducements for staff to actually to act in an unethical fashion. And one of the things that we see increasingly within the ethical code is the need for firms, and this will also be covered in ISQM1 as well in more detail, the need for firms to have staff appraisal systems that actually purely concentrate on technical ability to conduct audit work and ethical behavior, as opposed to commercial behavior as a path to partner level promotion. Okay, that was quite a lot to get through in the last hour or so. I hope you've all taken something from the last hour. If you have any additional questions, then my email is at the end of the slide presentation there, so feel free to email me. My Twitter handle is there, and also my LinkedIn handle. So thank you very much for your time this afternoon, or whatever time of day it is in your wherever you are in the world. I hope the rain outside my window here has not disturbed you too much, and see you again soon. Thank you very much.